Let's now see the power of dynamic open and develop a simple volatility breakout based on the Crable stretch method. We're going to do this for coffee using a 15-minute chart. Our system will hold overnight, but it does use intraday data. First thing we're going to do is we're going to set up, like we had before, the simple Crable stretch system on the default. We are not going to put slippage and commission in quite yet. Okay, we did not set. See, this shows only long trades now because we set long short to 1. Now we will set it to 0. And now we'll see both long and short trades. And let's look at our results. We lose $28,000. So the results really aren't that good using the default. Now, if we go to our table here, which optimized dynamic open, we see 30 and 1.2 as our best set of parameters. 30 and 1.2. Okay, we make $80,000, $128 a trade. Drawdown is $37,000. Equity curve is a little rough. Okay, now our next step is we're going to try to actually build a trading system using this. We're going to pick our Crable entry on our dynamic open using the NR combination. And conditions we can filter with our exit. We're going to remove the original. We're going to use our 30 and 1.2 like we had here. And we'll do our 100 and we'll add slippage and commission in a second. Oh, again, we didn't set because these can go long, short, or both. We're just looking at long trades when we do this. So let's set this to long and short. Okay. So we see here we make 87,000. Average trade is now up to 188. Equity curve still doesn't look great. But the advantages of these systems is that we can add filters to the entries. First thing we're going to do is set the slippage and commission. So we're going to use here $5 commission one side, $20 slippage one side. So that's going to be $25 and $50 per round trip. So we're going to be deducting $50 per trade because in TradeStation, whatever you put in for slippage and commission, you have to double because that's per side of the trade. Okay, that brings us down to 64,000 in performance. Equity curve looks a little bit rough still. But as I said, the advantages of these is we can, without coding, actually develop filters for our system. So let's try a filter here. Close is greater than the average close, comma, 50 bars. Close is less than the average close, comma, 50 bars. So in essence, what we're doing is we're saying we only take entries in the direction of the trend. We're using an NR7 here as our default. Let's see what that does for us. $83,278 a trade, 28,000 drawdown. Now, the NR pattern is something that we can actually optimize if we'd like. So we're going to optimize from 4 to 14 in steps of 1. So this is the narrowest range day. So we're going to say I'm only going to buy when I have the narrowest range day in the last 4 all the way to the last 14 days. So this restricts how often we trade. So if narrow ranges lead to better trades, the more we restrict it, the better our trades should be. So we're going to go here in TradeStation and do our optimization. We can see we're getting some very good answers now, answers that were better than we had before. And we'll look at the optimization and we'll see if there's anything that looks like it's a good area of the curve. So now when we look at our optimization, we see that 10 produces good results, 14 produces about the same results, 12 is the best, but 10 and 14, 12 is between there, 11's good, 13's good, 9 still is okay. So because of that, let's just stick with the 12 and see what our results are. We can see we make $139,000 overall, about 40K on the long side, and 99K on the short side, over $570 a trade. Our drawdown is a little more than $20,000 peak to valley, which includes equity curve feedback, give back, and our max drawdown closed trades is only 15K. Our equity curve is a little bit rough. It did very, very well up through 213. It had a bad 213 and then it started making good in 214 again. It hit its last equity peak in February and it's been moving kind of sideways since. If we look at the trade by trade, we actually can see the reason for that, which is a couple extremely large losing trades that have occurred. We have one here in October. We have another one through July and August, which is over $9,000. Look at the period returns. We are up over 12,000 the past 12 months, 10,000 this year, 45K we made in 214, marginal losses in 213, and we did well since. If we look at the monthly returns, we can see that the system has a low winning percentage in May, even though it made money in April. We can see the performance numbers. We could see that in August of this year we lost 12,000. In March of this year we lost 11,000. So we can see the system does basically win. It does have some weak periods. Now, some of this stuff could be fixed with adding some stop mechanisms. Another problem is when trades last too long, we end up seeing that they become large losers. We could limit that feature by exiting after a certain number of days. So there's a lot more we can do with the system. But think about how quickly we were able to prototype a decent coffee system using dynamic open and these system shells without doing any coding whatsoever.